The entire architecture of modern portfolio theory is built upon a single idea, the virtue of the medium. The classic 60-40 portfolio is the icon of this philosophy, a balanced blend of assets designed to produce moderate returns with moderate risk. But what if moderate risk is actually the most fragile position of all? What if the path to true, resilient wealth lies not in the comfortable middle, but at the absolute extremes of safety and speculation? In the next 10 minutes, you will learn the powerful and counterintuitive logic of the barbell strategy, a framework popularized by the philosopher and risk analyst Nassim Nicholas Taleb. You will understand how to structure your investment portfolio to be simultaneously hyper-conservative and hyper-aggressive, making it immune to prediction and anti-fragile to chaos. The barbell strategy is a philosophy of duality, a conscious rejection of the fragile middle ground. The core thesis is that assets categorized as medium risk, like most corporate bonds or high dividend, blue chip stocks, often provide the worst of both worlds. They offer an only mediocre upside potential, but can still suffer catastrophic losses in a true market crisis. The barbell investor avoids this fragile middle entirely. Instead, they allocate their capital to two extremes. The vast majority of their assets, typically 85% to 90%, are placed in extremely safe, low-risk instruments. A very small portion, typically 10% to 15%, is allocated to a basket of extremely high-risk, high-upside speculative ventures. The goal is to create a portfolio with a built-in positive asymmetry. The hyper-safe side of the barbell acts as a floor, ensuring that your downside is protected and you can never be wiped out by a market crash. The hyper-aggressive side provides you with exposure to massive, open-ended, non-linear gains. Your survival is guaranteed, but your potential for explosive growth is uncapped. This rejection of the moderate middle is a radical departure from conventional financial advice. But how does it work in practice? How do you actually construct a portfolio that is 90% risk-free and 10% lottery ticket? And why is this structure so powerful? The mechanics of the barbell are straightforward, but its implications for risk management are profound. Theory: the 90-10 construction. The most common application is a 90-10 split, though the exact percentages can vary. The 90%, the fortress of safety. This capital is invested in assets with the lowest possible risk of permanent loss. The gold standard here is short-term government securities, like U.S. Treasury bills. The primary goal of this sleeve is capital preservation, not generating a high return. This is the bedrock of the portfolio that ensures your survival through any economic storm. The 10%, the engine of upside. This small sleeve is where you take aggressive, calculated risks. This capital is invested in a diversified basket of speculative assets that possess convexity. That is, their potential upside is many multiples of their potential downside. The most you can lose on any single investment is 1x, but a winner could return 10x, 50x, or even 100x. This could include a venture capital fund, angel investments in startups, or a portfolio of microcap biotechnology or artificial intelligence companies. Analogy: the bridge and the jetpack. Imagine you need to cross a deep canyon. The traditional moderate-risk investor attempts to walk across on a single tightrope suspended 1,000 feet in the air. They are skilled, but a single unexpected gust of wind, a market crash, a sudden spike in inflation can lead to a catastrophic, irrecoverable fall. The barbell investor takes a different approach. First, they spend 90% of their resources to build a solid, indestructible steel bridge that spans the entire canyon. They can walk across it as many times as they want, with zero risk. Their survival is guaranteed. With their remaining 10% of resources, they fund a series of experimental jetpacks. Most of these jetpacks might sputter and fail. That's expected. But if just one of them ignites, it will propel them across the canyon at breathtaking speed. Example, a barbell portfolio in practice. For a $1 million portfolio, the 90%, $900,000. This is invested directly in a ladder of 3-month and 6-month U.S. Treasury bills. This capital is earning a modest but extremely safe yield and is completely insulated from the volatility of the stock market. The 10%, $100,000, this is the venture sleeve. It is not used to buy a single speculative stock. Instead, it is diversified across 20 different early-stage publicly traded companies in a high-growth sector. The investor fully expects that 15 of these companies will likely fail, but the entire thesis rests on the possibility that 1 or 2 of the remaining companies will become a dominant force in their industry, and their massive returns will more than pay for all the losers. The barbell is a powerful concept, but its implementation requires discipline to avoid 2 critical mistakes. Pitfall number 1, a fake barbell. A common error is to misinterpret the speculative side. An investor might think they are building a barbell with 90% in T-bills and 10% in a Nasdaq 100 index fund. This is not a true barbell. The Nasdaq is a collection of the world's largest and most successful companies. It does not offer the explosive 100x type convexity that the strategy requires. The risky side must be genuinely speculative. Pitfall number 2, emotional impatience. This strategy can be psychologically taxing. The safe side feels boring and unproductive for long stretches. The speculative side is highly volatile and will be filled with many small losses. It requires immense patience and emotional detachment to endure the inevitable string of small failures while waiting for one of the rare, massive successes. Avoiding these errors is key to implementing the barbell correctly, but the true power of this model is unlocked when you apply it not just to your investments, but to your entire financial life. The advanced strategy, the lifestyle barbell. The barbell is not just an investment allocation. It is a holistic philosophy for life. Your career. You can build a barbell with your income streams. Your 90% is a stable, secure, and perhaps unexciting primary job that pays the bills and guarantees your survival. Your 10% is the side hustle or passion project you work on in your free time. It might be a small business, writing a book, or developing an app. It has a high chance of failure, but a small chance of becoming your new, far more lucrative career. The failure costs you little. The success could change everything. Your personal finances. On one side of your life's barbell, you have extreme conservatism. You maintain a high credit score, carry zero consumer debt, and have robust insurance coverage. This makes your personal balance sheet incredibly resilient. This financial strength then enables the other side of the barbell. It gives you the freedom and the cash flow to take calculated risks, investing in your education, starting a business, or making speculative investments that others who are burdened by loans and high mortgage rates simply cannot afford to take. Let's distill this powerful strategy into its 3 essential principles. Reject the fragile middle. The barbell strategy avoids moderate-risk assets in favor of a portfolio built on 2 extremes. The vast majority, 85–90%, is in hyper-safe instruments for capital preservation, while a small minority, 10–15%, is in hyper-aggressive speculative assets with explosive upside. Engineer positive asymmetry. The goal of the barbell is to create a structure where your downside is capped and your upside is unlimited. The safe side protects you from ruin, while the speculative side gives you exposure to massive gains from chaos, volatility, and unforeseen positive events. Build a barbell life. The advanced application is to extend this model beyond your portfolio. Structure your career, your skills, and your personal finances with the same combination of extreme safety and calculated, speculative upside. This is how you build a truly anti-fragile life. The future is uncertain. The barbell strategy is a confession that you do not need to predict the future to profit from it. If this analysis provided you with real value, invest a single click in the subscribe button to get daily access to the Codex. Knowledge is the new capital. We'll see you tomorrow.